Okay, so let's make a full breakdown of the situation that we currently have on Euro USD. Now, from a monthly perspective, we have a market that clearly has now rejected a very strong level of previous support here, which is again turned support at this level. And the market created a nice double bottom, starting this huge move to the upside. So on the monthly, we have a market that rejected the support. And what we can also see here is that the market with the last monthly candle, this monthly candle here, has created the candle that we expect the next one to fill in the wick. And this is a pattern that we spoke about many times, specifically on YouTube. Now, if we go and see what we have from a weekly perspective, what we can see is that the market has created a nice impulse to the upside, followed by a nice retracement. After an impulse and a correction, what do you expect? You expect the continuation to the upside and the completion of the impulse, correction, and impulse pattern to the upside with the creation of a higher high. Specifically, if you want information on the retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see is that the market went exactly to test the 0.382, which, if you remember, was our target to the downside after the market had created this impulse to the upside. When the market was here, we said we want to see the market make a retracement to this level before the continuation to the upside, because it's the Fibonacci level that is aligning better with structure from a weekly perspective. So the market went exactly to test our target to the downside, and then it has rejected the zone to the upside. Specifically, we said we want to see the market from here create a higher high, go and stop out all the people that have their stop losses above this high, and then make a retracement to this level. And then again, we spoke about Euro USD, saying that we wanted to see the market make the move to the upside, create the equal high, and then create this inverted head and shoulders and start the move to the upside. And that again is exactly what the market has done. But now, what kind of situation do we currently have on Euro USD, and which kind of opportunity we can be looking at on this pair? By the way, those previous analysis on Euro USD, I will link them in description. So what we have at the moment now, from a daily perspective, we have a market that clearly has rejected the previous resistance, which is now turned support. So on the weekly, we have a bullish situation. On the daily, we have a bullish situation, but there is one very important thing to keep into consideration. The market has rejected aggressively with the previous daily candle the high. So it clearly failed to continue higher. And as we will now see on the 4-hour time frame, all structure is bearish. Now, before I show you how we have to be approaching Euro USD for a potential trading opportunity and how we will be approaching it with students, let's first go and see what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing on this pair. Now, what we can see is that we went from minus 114K net positions all the way up to plus 118K net positions. So we went from having way more shorts than longs from an institutional perspective on Euro USD with 271K shorts and 157K longs, all the way down to having way more shorts than longs with 72K shorts and 190K longs. And now with the last report, we can see that they added another 4.7K longs. Now, if we go and see what we have on the 4 hours, as I just said, we have a situation in which the market clearly, after this impulse, has clearly created a lower low and broken all the 4-hour structure to the downside. The 4-hour structure is obviously at the moment here, which is now acting as previous support, now turn resistance. So on the 4-hour, everything is absolutely bearish, and we can obviously not be looking for any kind of longing opportunities yet. And there is a lot that the market has to do on the 4 hours before everything can be considered again bullish. So the way in which we will be approaching Euro USD with students is, as usual, reactive and not predictive, because at the moment we can't be looking for a long and we can't be looking for a short. Now we have resistance here on the daily and we have support here on the daily. and how we will be approaching this. Now, if the market will show us on the daily time frame, if everything will remain like this on the 4 hours, then on the daily time frame the market will break the zone to the downside. If the market will break the zone to the downside on the weekly, we will have a double top. And if on the weekly we will have a double top, then on the daily, after this impulse, on the correction, on the retest of this new previous support, now turn resistance. With students, we will be monitoring price action on the 4-hour time frame inside of this area, and as soon as the market will provide us one of our valid entries, we will be taking a beautiful short with a very good risk to reward and very good probabilities for the move to the downside and a creation of a very strong drop to the downside, because the market has clearly failed to complete the pattern on the weekly. On the other side is as if, as we said, on the 4 hours, the market will do its job and start shifting back to a bullish market, as it should, considering also what we have from a COT perspective. Then at that point, even before this resistance will break to the upside, we will be looking for a longing opportunity with students on the 4-hour time frame inside of this area, if and only if after the market will have clearly shown us a shift from a bearish to a bullish market, the market will give us one of our valid entries, and the upside target will simply be the minus 27 of the Fibonacci taken on the weekly resistance, on the weekly retracement, which is at this level here, which is the first resistance zone. And if you look closely, it's also very near to the previous high, which was the resistance here, which is again resistance at this area. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.